Hey, listeners, are you ready to take control of your car buying experience and make smart financial decisions? Introducing the Ultimate Auto Finance Guide, your go to resource for navigating the complex world of auto finance. Whether you're a first time buyer or looking to refinance, this guide has all the tips, tricks, and insider knowledge you need to secure the best deal. Don't miss out on this opportunity to empower yourself and drive away with confidence. Head over to www.ultimateautofinanceguide.com now and grab your digital copy. Trust me, it's the smartest investment you'll make before buying your next car. Welcome to another episode of Drive to Success, Mastering Auto Finance. I'm your host, John Lewis, and today we're going to be talking about obtaining auto financing for business owners. If you're a self-employed entrepreneur, an LLC owner, or running a C corporation, navigating auto financing can be challenging. Unlike traditional employees with predictable W-2 income, business owners must prove financial stability through credit scores, tax documents, and profit and loss statements. In today's episode, we're going in depth on what it takes to qualify for business auto financing, how to improve your personal approval chances, and the tax benefits and disadvantages of financing a vehicle under your company. Let's get started. In this segment, we're going to be talking about understanding business credit scores. When applying for business auto financing, lenders evaluate both your personal and business credit profiles. While personal credit history plays a role, business credit scores carry significant weight. Here are two key credit scoring systems. The first one is Dun & Bradstreet's Paydex score. The score ranges from 0 to 100, with 80 plus being excellent. The score measures payment history with suppliers, lenders, and vendors. A low score can indicate slow or inconsistent payments, making approval difficult. To build your Paydex score, ensure timely payments to vendors that report to Dun & Bradstreet. The next scoring system is Experian Business Credit Score. This score also ranges from 1 to 100, with 76 plus being considered low risk. Factors include payment history, outstanding debts, and credit utilization. Negative public records like bankruptcies and liens can lower your score. Opening business trade lines and maintaining on-time payments helps improve this score. Many lenders also review Equifax business credit reports and FICO SBSS scores, which incorporate both personal and business credit histories. If your business credit is weak, your personal credit, i.e. your FICO score, may be used as a determining factor. Now let's talk about profit and loss thresholds and key financial documentation. Lenders want to ensure your business is financially capable of handling a loan. Here's what they typically require based on business structure. For sole proprietors, at least 2 years of tax returns, which is Form 1040 with Schedule C. Recent bank statements, usually 3 to 6 months to show cash flow, and a strong personal credit score may be required if business credit is insufficient. For LLCs and C corporations, profit and loss statements showing revenue, expenses, and net income, balance sheets outline business assets, liability, and equity. Business tax returns, which would be Form 1120 for C Corps, Form 1065 for partnerships, and Form 1120S for S Corps. And proof of business income through bank statements and accounts receivable records. Next, we want to talk about profit and loss thresholds and cash flow requirements. Lenders prefer businesses with stable annual revenues above $100,000. They also look at positive net income as a key factor. Consistent losses may lead to rejection. A debt-to-income ratio below 40% improves approval chances. If your business is new or lacks strong financials, lenders may require a personal guarantee, making you personally responsible for repaying the loan if your business defaults. If you're struggling to secure financing, consider these strategies. Build business credit before applying. Open business trade lines and maintain on-time payments. Work with vendors that report to Dun & Bradstreet, Experian, and Equifax. Separate business and personal finances. Establish a business checking account and business credit card. Avoid using personal accounts for business expenses to keep financials clean. Lower business debt and improve cash flow. Reduce outstanding business loans and credit card balances. Maintain positive cash flow by cutting unnecessary expenses and ensuring consistent revenue streams. Consider a larger down payment. A high down payment, usually 20% or more, lowers the loan amount and risk for lenders, increasing approval chances. Leverage personal credit if necessary. If business credit is weak, a strong personal credit score of 700 plus can help secure financing with better terms. Let's talk about tax benefits and potential disadvantages of business auto financing. One of the biggest advantages of purchasing a vehicle under your business is potential tax savings. However, there are also drawbacks to consider. First, the tax benefits. Depreciation deductions under Section 179. Businesses may be able to deduct the full purchase price of a qualified vehicle in the first year. The deduction limit for 2024 is $28,900 for SUVs and $1,160,000 for heavier vehicles over 6,000 pounds. Consult a CPA before claiming Section 179, as improper deductions may trigger an IRS audit. Next would be mileage and operating expenses. Businesses can write off expenses such as fuel, maintenance, insurance, and registration fees. You can either use the actual expenses method or the IRS standard mileage rate. Next would be leasing versus buying. Leasing may offer a higher tax deduction since monthly payments can be written off as a business expense. Buying allows for depreciation deductions but requires ownership responsibility. Now let's talk about potential disadvantages. First would be higher interest rates. Business auto loans often have higher rates rather than personal loans, especially for businesses with limited credit history. Next would be strict documentation requirements. More paperwork is required compared to personal loans. Some lenders may require personal guarantees or collateral. Next would be usage restrictions. Vehicles may need to be used exclusively for business to qualify for deduction. Mixing personal and business use may lead to partial deductions only. And last would be tax complexity and audit risk. Claiming large deductions, including Section 179, can increase an IRS audit. Always consult a CPA to ensure compliance and avoid tax issues. Securing auto financing as a self-employed business owner requires planning, strong financial records, and understanding of business credit. By improving your credit score and maintaining solid financial documentation and consulting with a CPA for tax strategies, you can maximize the benefits of business auto financing while avoiding common pitfalls. Thanks for tuning in to Drive to Success Mastering Auto Finance, where we help you drive smarter decisions every step of the way. If you find today's episode helpful, don't forget to subscribe and share it with someone who's ready to take control of their car buying journey. Until next time, keep driving towards success.
Rolling down the avenue to a jazzy beat, following that rhythm, life's a one-way street. Chasing dreams with passion, every mile's a goal. In the world of finance, stories to be told. Catching the horizon with a soulful groove. Navigating numbers, got nothing to lose. Every calculation, every deal we sway. In the realm of autos, Drive to success, we're mastering the art. Through the lanes of finance, we set apart. Jazz and soul, where the numbers align. Make your journey smooth with wisdom divine. Hit the keys of knowledge, let the insight play. From leases to purchases, every savvy way. Revving up those engines, zeros turn to ones. In the studio of life like morning sun. Feel the soul, embrace the jazz. In the auto world, let's razzmatazz. Financial gears shifting smooth and slick. In the podcast lane, we find the tricks. Cruising through the jargon, ain't no mystery. Unlocking all the secrets in auto history. Low ones and rates, they glisten like the stars. Drive the distance, no matter how far.
Thanks for sticking around until the end. Before we go, if you're in the market for a new or used car or even thinking about it, you must check out Drive to Success, the Ultimate Auto Finance Guide. It's packed with strategies to help you navigate the tricky world of auto financing, avoid costly mistakes, and get the best deal possible. Head over to Amazon and grab your copy today. Just search for Drive to Success, the Ultimate Auto Finance Guide, or use the link in our show notes. Take control of your car buying experience and drive away with confidence.